Welcome to Admiral Markets live trading. We're going to take a look at the Forex market in a minute. As always, though, we're going to take a look at the PowerPoint before we do the analysis and check the currencies. As always, the risk disclaimer explaining that trading foreign exchange and global financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So we thank you for your attention on that. Once again, welcome. My name is Chris, and this is hosted by Admiral Markets. We're going to take a look at Forex trading, and tonight we have an educational webinar. I'm not sure. I think it's filters, but let me check that in the meantime, in fact. And we're going to be taking a look at the following focus: establishing a trend, looking for opportunities, checking if there are any filters, in fact, blocking a trade from developing. If not, then deciding what the trigger is and the entry. Make sure to take a look at social media. But before we actually look at the Forex economic calendar and the charts, I'm going to say good morning to Michal.
Good morning, guys. Good morning, Chris. It's lovely to have you back with us. I actually missed you a lot yesterday. I'm pretty sure that all of the attendees did. I'm going to be very happy to show you what I've been working on lately. We'll continue our fun series of prep presentations called Fun with Forex, where I'm going to be talking about fun facts and interesting events and interesting things to say about finance, stock exchange, and Forex. My name, as always, is Mikhail Onokhov. I'm a client relationship manager for Admiral Markets. Here's my lovely picture. If you'd like to reach me in some way, you can always do so on this email. You can always find me on Skype or add me as a connection on LinkedIn also. Here's also my email for Trading Camp, our 4-week online educational Forex program. As I said before, every time Chris does live trading seminars, I'll be doing fun with Forex things before he does them. And today's topic is going to be open outcry. So before we start, I would like all of you to close your eyes and think for a second about the words stock exchange. What do you see? I'm pretty sure you're going to be seeing men in jackets, gesturing, yelling, waving papers around and speaking on the phone, buying, selling, all at the same time. This site, this picture has a name: Open Outcry. This very site, the site of Open Outcry and floor traders, inspired me to dedicate my career to finance, and here I am today. However, nowadays, a floor trader is slowly becoming a relic, and firms all over the world shift to electronic trading. Electronic trading is quick, efficient, decentralized, and has very little room for human error. And unlike Open Outcry, there is no limit on how many participants can take part. In fact, more is merrier. Electronic trading system match buyers and sellers, and trading volumes become larger every year. There's only a few open outcry markets left all over the world. And there are New York Mercantile Exchange, Chicago Mercantile Exchange, Chicago Board of Trade, Chicago Board of Option Exchange, and London Metal Exchange. Those are the only open outcries markets left in the world. So you see people in funny jackets waving hands around only in Chicago, New York, and London. Nowhere else they are to be seen. However, none of those exchanges are deserted. The line of firms who want the representatives in the pit is huge, because being a part of such an exchange is exclusive and it's very prestigious. But nonetheless, electronic trading is the present and the future. So think about it next time you log into your MetaTrader. All those traders here, or here, or here, don't do the open outcry anymore. They trade just like you do, exactly like you do, with a computer. Think about it. You're one of them now, and you are very cool. Thank you very much for your attention. If you would like to become even cooler and get Forex educated, you can do so at camp.admiralmarkets.com. This is a 3-week course with a 1 week dedicated to live trading, so 4 weeks in total. You will receive everyday assignments that will educate you on Forex trading. You will receive strategies that have been prepared by professional traders. You'll get performance tracking, personal coaching, live conferences with mentors and pro traders, and also literature will be supplied. All you have to do to get enrolled in such a program, which will start on the 4th of November, so you do have more than a week to prepare, you have to write a small essay on your Forex aims and open a real account with $10, or if you are from Western Europe, we have a minimum deposit of $150 there. So a real account with a minimum deposit, that's all you have to do. If you would like to ask me a question or send me an email, here is my contact information here. If you want to be enrolled in training camp, there we go, camp@admiralmarkets.com. If you would like me to send me a topic for Fun with Forex, or would you like to contribute an interesting fact, you can contribute so at mo@admiralmarkets.com. Thank you very much for your attention. I will now pass the floor back to Chris.
Yeah, sorry about that silence. I was looking for the microphone, in fact, and the option screen was a bit hidden, so couldn't find it. 1, 2, 3. But here I am. In the meantime, I'm showing you the daily wave analysis that I did for Admiral Markets, and it's found by going to Analytics and going to Wave Analysis. All right, daily wave analysis there. Or in fact, I think it's just, let me go to the website first. I think it's just Wave Analysis. I did check the educational, calendar or our educational program, and it is indeed about filters tonight. So that's at 6 p.m. Central European Time, and you can go to education, click on webinars, and you can register for that. And analytics, go to wave analysis. We're going to go to the Forex calendar though, and take a look what might be happening in this session. Not much. We have medium impact news on the German PMI. That could still be of interest though. That's 35 minutes from now, and some USD news later in the New York session. Other than that, I do think we have, by the way, a time zone or a hour shift in the majority probably of Europe. Let me check that. That will not influence, by the way, the times we have our webinars next week. It will stay the same time. It's only the GMT time, in fact, that's moving. So whatever time you're looking at the webinar right now, then it just stays the same. For example, I'm looking at, I'm starting this webinar at 7:45 a.m. because I'm on UK time. That will remain the same. So next week it will be 7:45, despite the fact that the time goes back 1 hour. So, but let me check if that is indeed, does it, oh, it doesn't show. I don't think it does. Oh, this calendar doesn't show it. But I will have to check. I think it's this weekend. Does anyone know if it's this weekend, the hour shift? In any case, it doesn't influence our trading times. I mean, our webinar times. Alrighty. So today, the title of the webinar is going to be about bounce trades. So we're going to look for trend lines specifically and see if we can get any bounces. But also, for example, off fibs. It doesn't necessarily have to be a trend line. Bounces can happen off support and resistance. Support and resistance, of course, can be a fib. It could be a trend line. It could be a trend channel. All those can provide bounces, right? Basically, when the currency is at a bounce or break spot, it is at a decision-making moment. Will it go through support or resistance, or will it respect that support and resistance? And often enough, the support and resistance is the winner when the price approaches the support and resistance the first time. Right? Price usually, especially if it's a major level, doesn't go through that in one go. It respects it. Then the second time, if it does manage to go through the second time, it's more successful statistically. It doesn't have to always break the second time, because sometimes the support and resistance causes so much difficulties for the price that it reverses and retraces. So we explained a bit about that, in fact, about this topic in the seminar that was broadcasted through internet as well, besides me being live in the audience on Tuesday in Lithuania. I'm not sure if anyone was able to watch that by any chance. That's 2 days ago. And we also had a webinar, of course, from the Admiral Markets office actually in Lithuania. Lau was there, great. I hope you enjoyed it. It's always difficult, you know, you have 1 hour to provide content, so I was giving a free hand what to show. Oh, were you there live in Kaunas, Lau? That's great to hear that, Lau. Very good. I wish you were there. That's a pity. I would have liked to meet you then in that case. I wasn't sure. That's a pity. But I'm glad that you enjoyed it in any case. And Vigantas was watching through internet. Okay, cool. That's great. Well, I'm happy that that you all were looking at that, and I hope that it indeed gave you some extra information there. Okay, no problem now. Yeah, I can imagine if you were in a hurry. No, definitely understandable. No problem. So that was that. I returned yesterday a bit early. I had to get up. I think I got up at like 3:30. So it was a long day again, but it was definitely worth it. And now we are here. So let's take a look at the market. Now I don't have any lines or so prepared. I still have some analysis from yesterday afternoon when I got back. But to be honest, I did sleep a bit later than usual today to catch up a bit of the lack of sleep I had. So I don't have anything prepared since, like, let's say yesterday afternoon. I didn't add any lines or so. So let's do that together, I would suggest, if you don't mind, and see what the dollar-yen might be telling us. From a wave perspective, this is definitely looking like a wave one up, wave two correction. Sorry about that. I'm just opening my drawing tool in the meantime. It's definitely looking like that, and we could get a bounce here to the upside. Right now, waves 2 tend, or waves B, potential wave B as well. We're not 100% sure it's a wave 2, but I would statistically give the odds of a wave 2 a bit higher chance. Are tend to be deep in any case, right? So we could have a bounce, in fact, off of this area. 786, 886. We're not sure which the bouncing spot will be. If it does go to 886, that should be the very last and deepest retracement the currency should go to, because after that we have double bottom, and well, technically speaking, double bottom is not necessarily invalidating a wave 1-2 structure, but it's not my favorite setup. I definitely would like to see the price bounce off the 886 fib. Otherwise, I think the chances of a wave 1-2 are slim. And of course, if the wave 1 bottom gets broken at 96.56, then of course this is definitely not a wave 1 and 2. That is the invalidation level, 96.56. So right in here, we were very close to the 786. In fact, price missed it only by 5 pips. And could be considered a 786 Fibonacci retracement bounce right there. All right, so one of the bounce ideas we could have is in fact an 886. So I think that makes sense. I'll see how many pips risk that is if the currency were to go to the 886 at 96.83. The stop loss would have to be below 96.56. For example, 96.53. So that is roughly 35 pips stop loss, which is not bad. So that could be a bounce trade idea right there, and I'll punch that in. Will price get to that level? Well, we don't know. That still remains to be seen, because the 786, as I already said, itself could be the bouncing spot. If the 786 Fibonacci retracement is the bouncing spot, then we will see a break through the trend line, a hook back, bounce, and continue. So from a bounce perspective, we're basically, I think, good entries would be at the 886, at the break and hook back, Those two are probably the best. Or a bounce off the 886 and a hook back and continue could also make sense, right? So there's another idea. So those blue circles are potential bounce trades. Could we have a bounce right in here right now? It's possible, to be honest. It is possible because we did break above these 1 hour tops. Right in here. Let me zoom in. You can see fractals here indicating some tops. We did have a good 1 hour bullish candle pushing through that, right? It is possible. So there is a potential bounce trade. But the break may be not as clean as we would like it. What do I mean with clean? Well, we have only one candle pushing just a bit above this high, right? These tops. It's not like we have a clear 2-3 candles and we're getting a hook back like this. So that makes it a bit less interesting to trade a bounce right in here. But it is possible. If it is, somehow I'm not that interested in it. But maybe because it just seems too choppy at the moment for me. I think that's it. But in any case, even in theory though, a bounce trade right in here could have a stop loss here, which is tight though, right? And the problem or the disadvantage of that is that this tighter configuration would lead to a higher risk of getting stopped out when the price were to go to the 886 fib and still bounce. That's the disadvantage. The advantage, of course, is just the fact that it's a tighter stop loss and a better R2R potential. The other option of a bounce trade right in here, right where price is right now, is putting a stop loss below still the swing high, swing low, the invalidation level of wave 1. And the advantage of that, obviously, is that even if price does go to the 886 fib and bounces, the trade is still safe and doesn't turn into a loss. So yes, safer but bigger stop loss, and maybe therefore a slightly more difficult to get a higher R2R. So that's the balance. But anyhow, that's just in theory and on paper because I wouldn't be, somehow I'm not interested. I would want to continue and see if we have something else. I mean, it could bounce in here. Maybe we can even monitor a lower time frame to see if we get a bounce. We can take a look at the 15-minute world and keep an eye on price action and see if we get maybe some interesting signals. But it is an option. Otherwise, besides that, as I said, the 886 bounce or the break and bounce right in there are the better ones. If you look at the 4-hour chart, I don't like, for example, this bigger wick in here. Not too appealing for longs. So there's no clear direction yet on the dollar yen right here. So, but we can keep an eye on the 15-minute world. In any case, I'm going to punch in an order at the 886 fib in the meantime, which is the only place where I can put an entry order because the break and bounce, I don't know, I cannot place a entry order at that blue circle because we don't know where the top is yet, right? We have to wait for the break before we can place the pending order for after the break. That's maybe logical to some of you, but I just wanted to emphasize why at the moment we can only place an entry order at the 886 fib and not at this bounce because we need it to break first. Then we know where we can put it. So I'll put an entry order at 96.88, I think, yes, and stop loss at 96.53. So how about the target? Let's talk about that as well. The order is there. I don't know, somehow the ask and bid lines don't appear on the chart. That happened last time too. I can change the color. Maybe that's, I don't know why, but the entry order is there though on my live account. But anyhow, the target. We got various options. In fact, minus 272 at 99.50 is the conservative. I mean, that is the really, really conservative target. The chances of that, the price reaching that level is very high if we do bounce. Let's see. I'm going to aim for a higher target though. Yes, because to me, the reason why is that this bottom right in here, I think that is a bounce for a bigger move up. We've talked about this before, but if you look at it from maybe a weekly perspective, you can see that, sorry, I deleted the chart. All right, if you look at the weekly perspective, you can see this tremendous move up and a triangle. So this in itself, from a larger perspective, from a weekly perspective, could be a bouncing spot for a move up to 110, 115, maybe 120. So for me, this is very interesting because it could be a bouncing spot for a very, very strong move. That we don't know yet. The invalidation level of that analysis is 95.85. If price moves below 95.85, then it's probably in fact going to correct down to 91.90, and we can see a bounce off 90.91 for that upside. So break of 95.80 would lead to most likely a move to 91, and then from 91 most likely a bounce up to 110 at least. So anything above 95.80 could be a bounce already for that upside. And if we look at this daily chart, look at the triangle here, A, B, C, D, E. That could be finished. This could be a bounce. So it's basically would be a bounce off the bounce. Therefore, I do expect a lot of upside. So conservative target is 99.50 or 100. The more aggressive target, because of that, because it's a bounce of a bounce off with a analysis that this could be a bigger wave up, well, in that case, a more aggressive target will be 102.80, and even that is relatively conservative because, as we've said, this could be the bounce of a very big weekly fib. Well, in that case, the target could even be, the -2 target could even be 110, if not 120. So I know that seems quite far, but in some cases, those levels are within reach if you really expect an impulse, a very big impulse, right? Is that something that we should aim for? That really depends. It is probably not. It's difficult to imagine a 2,500 pip move, and it will take a lot of time. So probably that's a bit within. Let's say that the likelihood is still difficult to predict how fast that can happen and if, but it is something that you might want to target with a low risk potential just for the fun. That's what I'm going to do at least. I think the major part of the trade I will go aim for -1618, which is 102.70. But it's actually 102.85, but I just go a bit below that. That itself is still a big reward, that's about 600 pips, versus a 35 risk, which is something like, let's see, 117 reward units versus 1 risk. So that's a very big potential there, right? 16 or 15 to 17 reward units versus the risk. So that's a lot. For the fun of it, I'm going to take a very small position, and this is just more for fun, and our target even something higher. I'll put the target at 119.80. I know that sounds exaggerated, but just want to make a record for myself. See if I can hold on to something like that high. So it all depends now if the price were to move down or not. We don't know. If it doesn't, then our second option of entering is a break of this magenta, hook back, and continue. Right? Either take the continue, well, that's a breakout trade, in fact. So we'd have to take a bounce trade here. Within our focus of today, that would be the bounce trade there. I wouldn't necessarily, this bounce trade, personally, I wouldn't take it maybe off the fib. I wouldn't fib this and take the entry off the fib at the blue circle. I would be looking primarily if we get some nice 1 hour rejection off that level. Alrighty. So I think the dollar yen has a lot of potential, and I like the currency at the moment. So let's move on. If you have any questions, let me know. But this is what I'm looking at for a bounce on the dollar yen, and it's definitely at a very key bouncing level. So it's a perfect example of a bounce, in fact, for upside. You know, it's a great example. So our timing was good to choose bounce trades for today. Euro dollar. Well, it did make the push up, didn't it? Up to 138.20. So this is definitely an uptrend. Obviously, we already talked about it. And it's continuing to making that higher highs, higher lows. Not only did we break this year's high at 137.10 and daily top, but we're pushing through that. We had price making a closing with a daily close above that level. We have price hanging above it, indicating no downside pressure. Price bullishly staying above 137, which is a very good confirmation of that bullishness, right? Now, if you look at the daily chart, though, maybe even weekly, there is some potential bounce, but it's actually counter trend in this case. Does anyone know what it could be? This is the weekly chart. So obviously, if you look at the weekly, we're making higher highs, higher lows. If we zoom into price, you'll see that better. And here, since this turnaround here, candles are making higher highs, higher lows this weekly continuously, except I think here we didn't have a higher high, and here, otherwise it's definitely an impulse to the upside. So what kind of bounce trade could there be here? There could be two ideas, in fact. Does anyone have one of the two, or maybe both in mind? Any ideas? What kind of bounce trades could we see? Otherwise, let's start with, we are in uptrend. What kind of resistance could there be on this weekly chart? All right, we got some great answers here. Gary is saying a correction into level 4. Absolutely. That's a great one. We'll have to zoom in to take a look at that. But that's definitely a good one. Ralph is saying a buy limit at 137.77. Maybe we'll have to zoom into the lower time frame as well to see that. I don't know exactly the level. I'm always looking more like at structures, you know, like not so much as specific price levels. But we can take a look. Lau is saying head and shoulders. Let's see. Head and shoulders. Well, in theory, yes, it's possible that we push up here, right? Move down and up and then down, and you would get something like that. Yes. But that's still, indeed, I didn't think about it, but that's still so far away from us that it didn't cross my mind to look, you know, that much forward. But yes, that's possible that this could become the head, but we don't know exactly how far the head will go because it could go up a lot more still, right? Because we're movingly impulsively, right? If you look at the weekly charts, for those of you who know about time factor a bit more now, we're cutting the highs every weekly candle. So there could be still a lot of space to the upside. What I was thinking of is basically putting a fib on this downside. That could still be resistance levels. And we could see a bounce at those levels. One second, let me redraw that fib. But, and here's the but, the 618 on a weekly chart is it's not a precise level. Yes, it does have a precise level. The 618 is at 138.30, but price can easily break through 20 pips, and the price would still seem to respect such a fib, because for a weekly fib, it's more of a zone, right, of 30 pips than an exact price, because it's just the differences between the fibs are so big that even if we poke through 15 pips and then respect that fib, it's going to look like a respect. Now, obviously, the fibs on a shorter time frame are more precise in the sense that if the one fib is at 139 and the other is at 138.60, there's 40 pips difference. Price doesn't tend to go through that, shouldn't go through that fib more than 5 to 10, otherwise it's in fact closer to the other fib, isn't it? So it's all relative regarding the time frame. So yes, that is a resistance. Do I expect a big bounce here? No, it's not something I would trade. Yes, we could maybe see a pause there, a bit of a bounce, maybe sideways move. But because it's counter trend, and because the trend is so strong on the euro dollar, the bounce could be very passive at the 61.8 weekly Fibonacci retracement level. Just go sideways and then continue up to 140 and 142, as someone mentioned, 142.50, as Gary mentioned. So it's not something I would trade. If I would be in short-term trades, if I would have been in an intraday trade, then I would take profit at that resistance. All right. Now, I had a buy limit, in fact, on the euro dollar, but it didn't go as deep as I wanted it to be, so I'm going to delete that for the moment, because my target was the 61.8 weekly Fibonacci retracement, and we've reached that target. So once we reach a target, then I want to reassess whether that makes sense. 142.450 zone is as well a resistance. That's also the 786 fib here at 143. If the price were to go to through the 618, we do have a chance to go up to that 786 and find a bounce at that fib. Now the opposite holds true, of course, because we're in an uptrend. Maybe then looking for a bounce to the upside makes more sense. So let's do that and zoom in. Alrighty. You can see this daily chart. Also a very nice uptrend, isn't it? Look at that. A lot of power. And specifically this part is definitely getting a bit more impulsive, in fact. Pretty steep angle, looking at the angle of price. Yep. If you even connected a line like this potentially, we could have been at a resistance spot, but really with the NFP we broke through that, didn't we? So that's gone. We're in an uptrend channel. So what level might be interesting to go along? Well, one thing that crosses my mind is, personally, is the fact that we had a major yearly high at 137.10 that was broken. Now, if price were to go that far back, I think, of course, that level is definitely a bouncing spot. A break of such a yearly high and a good close above it with a inside candle yesterday, in fact. Look. Bullish candle, NFP, small inside candle and continuation. So usually speaking, a broken resistance of that magnitude should become support in the future. So that's definitely a level of interest, 137.11, for a continuation up to higher ground. Let's say 140 at first, 138.80 and then 140 probably, 138.80 and 139 and then 140. So something like that. Could that happen? A respect for this 138.30 zone, then down, and then a bounce off 137.11? Possible. But the thing is, we might not even get that deep necessarily before we move up. But if we do, then I think that would make sense to expect a bounce at that 137.11-ish area, right? Alrighty. We can zoom in a bit more. This is the supply and demand zone as well. We talked about supply and demand zone trading. Well, now we bump into a real life example where we have an impulse before that, a box consolidation, and then a break like that. Another reason, another confluence why 137.11 would be a major level, or actually the supply demand zone is a bit lower, between 137.06 and 136.53. All right, I made a green box out of that. So you can see the light green box indicating the supply-demand zone there. Let's see, other resistance levels could be, for example, this minus 618 at around 138.50 potentially. So that's kind of in confluence with this 618 as well. Let's see, anything else? We can zoom in lower. Obviously, this was a very strong move up and then an acceleration, correction, a corrective break. Then we got that bigger correction like that. But the break here, very impulsive. This is a very bullish continuation, isn't it? Very strong break, sideways break. So I think we can remain bulls at wise spots, right? We don't want to go long right now because of the 1 hour pin bar that we see here, for example. So we want to do it at wise spots, but I do think that in the long run we have space for the euro to go up to the 140-ish levels. So I don't think it's, at the moment I wouldn't be thinking about reversing, no, because the weekly chart is showing too much impulse at the moment, and the daily chart as well. If you look at the weekly and you look at the candles, it's just making higher highs and higher lows. The tops are being broken, bottoms, we have higher lows, and every candle here so far, almost every candle has a higher high. So that would be a bounce trade as well, is just to wait for next week and a retrace of this week's candle again to about 137.12, where we can get the bounce for upside. Because not only would that be a hook back to this year's high, but in fact, from a candle perspective, weekly candle perspective, right? If you look at this chart, you can see that it's also retracing this week's candle. So that's another way of approaching it. You can even wait till next week for that trade. Because whatever trade happens this week, next week we could see a retracement of this week's candle. Well, this week's low at 136.50, I think, or 136.45, most likely will not be broken. Otherwise, that impulse is weakening a bit, isn't it? So that would be a bounce trade, actually, in fact, better for next week if you look at that. So no reason to expect it yet. If we want to keep an eye on a reversal, I think the first thing we might want to look for is the fact that the daily chart cannot break the high for 5 days in a row. Once we have that, then there's substantial weakness going on in the market. Until then, I'm definitely bullish. This is a break of a key level, and we can see that continuation going on for a while. And the first sign that maybe we have some weakness going on is when really we don't, I would say, we don't break the daily top for 5 days. Something like what we had here, all right? But the thing is that not necessarily will you get a reversal if you don't break the high for 5 days. It can also turn into a sideways retracement that we never know. Yeah, let's take a look at the pound dollar. I'll just punch in I have nothing wrong with, I don't have anything against punching in even an entry order, in fact. I'm not a big fan of entry orders. I like market orders because I could keep up to date with the newest information and still make my decision. But in some cases it makes sense. It doesn't have to, I don't know if it makes sense to do it today or tomorrow, and if it doesn't make sense to wait for Monday to place it at 137.11. But even if price were to go that low, I guess it could make sense. It's moving pretty fast though right now, so we can keep an eye on it. Maybe we'll wait and look at it again at the end of the hour. We can see how price is moving here as well, right? Because if it does make maybe a bit faster downside first, and then moves up weekly like this, then we can also place a fib on this downside, see what targets it have, or we can get an ABC correction like that, and the best would be a long then at the target right here, for example, for that upside. So in that case, we can adjust the pending order from 137.10 to even lower because we expect the retracement to go a bit deeper. So that's the advantage of waiting to see how far this retracement goes. So then we can use that new price information to estimate where we can see the turn. But anywhere in here should be definitely a high likelihood of a bounce. Alrighty, folks, let's go to the pound dollar. This is just a retracement as we speak, although it's moving. The retracement is relatively aggressive on a 1 hour chart at least. But we know from a long-term perspective that 1 hour candle is just a 1 hour candle. If you look at the weekly and daily, you can see that bullishness. Now that would change though, of course, if we have a major wick on the weekly chart, then we can already maybe anticipate the fact that we won't have a continuation on the daily chart and we won't cut the high for 5 days in a row. So that's something we can check, of course, at the end of the week. In that case, I would adjust the analysis. But I'm not expecting that at the moment. If we do get a normal close this week, then we should expect a continuation because the weekly and daily charts are just showing that upside. Alrighty, let's move on. Pound dollar is a bit different in a way that the weekly resistance here, I got a lot of lines. Let me take a few of them off. The weekly resistance is pretty heavy. It's difficult to show on a weekly chart. Maybe I'll zoom in a bit. Like that, I guess. This is the best probably, yes. So you can see why it's a bit different. First of all, euro dollar broke through major resistance, which doesn't mean necessarily there is no resistance left, of course, but the pound dollar is right at resistance. That's the difference. Pound dollar is right at the 162.50, the 163 level. Those are all, as you can see, look at those tops here on the left. Look at those. Major levels. From a wave point of view, primarily 167.50 is important. Anything below that could still be a potential triangle finish of wave E for downside. All right, 1 second, folks. Sorry, I just had to plug in the battery because it was getting low there. So that's, sorry, so to finish the story, 167.50 is key for the triangle finish because that's what could happen with the pound dollar. It could be finishing a triangle right in here for wave E. This was D. This could have been C. Here's B and A we don't see. And if it is a wave E, then we can see a continuation of that downside maybe to 140 or 130. Wave E, though, is invalidated if price goes above 167.50. So if we break these resistance levels, these tops in here, we could see a continuation maybe testing this 167.50, and then it's at a break or bounce spot, at a very big break or bounce spot when we approach this higher red horizontal level. This in itself could be a break or bounce spot. Why? Because we not only have these tops, but also a black trend line here, and that is connecting, if you look at the chart, these tops right in here. So there are two major zones right here and at 167.50 that are key resistance levels. So we need to see a break of at least 163 before we can really expect continuation. So here, in fact, we are at a bouncing spot, maybe for downside. Could be. Let's take a look. Weekly chart. This was the last high. How many weekly candles do we have after that? 1, 2. This is the third. So it's too early to tell if this will indeed become resistance or not. We have to wait. Daily chart. Daily chart just recently posted a newer high yesterday, in fact, although it was bearish, the daily candle. In this case, on the daily chart, we'll have to wait for a break below these daily fractals here and this uptrend channel to have an indication that we indeed bounced off of this resistance level. Once we break through the daily uptrend channel and through support, then we know that the likelihood of a bounce, that this was a bounce for downside, is high. Right now, we don't know. We're at a bounce or break spot, but we don't know which one's going to win. So I'm cautious. I'm cautious both ways. I'm cautious to the upside, obviously, because we don't have much space to the upside. I'm cautious with the downside because I don't have enough confirmation that the reversal will happen. If I don't have that confirmation, I'd rather wait. Either the time factor is going to give me that confirmation, or price breaking through those levels is going to give that confirmation. One of the two. Time factor, as you can see on the chart, or actually price action. So that's why I'm just neutral at the moment and keeping an eye on the pound dollar, but not trading it. So contrary to the euro and the yen, dollar yen, no orders here up for my side. Does anyone have a specific currency in mind they would like to take a look at, in fact? Because besides these majors, I don't really have anything in mind, except the Aussie maybe. I think everyone likes the Aussie. So what happened with the Aussie? And then we'll take a look at the euro pound and then dollar CAD. What happened with the Aussie? Well, we were saying here, watch out for the 382. That could be resistance. Price stopped there. Stopped at the 23.6 retracement as well. And after we broke the 382, we said the target is the 50 fib and the minus 272. Confluence at 97.20. That's exactly what happened, and we had a great breakout trade to that target. So that was perfect. And price indeed respected, as expected, the 50 fib. And not 100% of the times will price respect the 50 fib, but that is why we must, in my opinion, we should plan our trading plan and coordinate it in such a way that we do take profit at that level, because the likelihood and probability of price respecting that level is high. And that's what happened. We did punch through a bit, and the funny thing was, if you then look at the 4-hour chart, you had a bit of a punch through, but that's why it's always important to keep an eye on, the fact that not only there's maybe one candle above it, but a multiple of candles. That's why if you get a consolidation zone like this, then you know that the break was just a justified break, not just an exaggeration, a bigger push through on a smaller time frame, and the next break is good to go. If you only have one candle, you don't have that confirmation, and something like this can happen. Basically, price went through the 50 fib by about 40 pips. And as I said, something like that on a higher time frame can definitely happen. Especially with NFP, of course, on Tuesday, which caused that upside. Now, yesterday we got a bearish engulfing twins. So what does that mean for the odd? I think anything, a hook back anywhere to this broken top, a hook back to this consolidation level, anywhere between 93.80, 90, what is this top here, 95? 95.30 could be a big bouncing spot for upside, right? That definitely has a bouncing potential there. The confirmation of upside continuation is when we break above the high, yesterday's daily high. That's the confirmation of upside. So what we have here is a classical example of respect for the resistance, expecting respect for the support at the green circle. The confirmation is a break of the blue horizontal line, which is yesterday's high. And the target would be the weekly 618 fib at 99.20. In fact, if we look at this weekly chart, what we should expect is, I mean, usually speaking, I don't think this strong bullish candle, the low of that, I think the chances of that holding and not being broken are pretty high. So we can put even a support line right there at last week's low. But another way of looking at it is just using the daily support, which is 93.85 right in here. And of course, we have the broken top, which could act as support as well at 95.30. Alrighty. So something like this, based on support and resistance, I think is likely. And then who knows? We're looking then a bit too far in the future, right? But something like this for the intermediate future, I think, has a high chance. How you place those fibs, in most cases, you just take the, well, in all cases, sorry, let me start with the first thing. I take it from left to right, from past to future. So if it's a downtrend, I would place it from top to bottom, from past to future. But if it's an uptrend, I would place it from bottom to top to get fibs here. In this case, indeed, from top to bottom, here you can see. Sometimes, though, you might have multiple fractals close by. In that case, probably the best is to take the higher one. Unless there's a significant difference between those tops. You see, there are a lot of fractals here and a fractal here. I didn't place the fib here, as you can see. I placed it here. This one is a bit higher, but I still use this one because there's significant time between those fractals. So then I use the most recent one. If those fractals would be all bunched together and all close like here, then I would take the higher one. Does that make sense? Same for the downside here. For example, we have a fractal here, but obviously we have one lower, which is quite close by. So in that case, it's just one movement, and I would put it from all the way to the bottom. You can use the oscillator also for getting an idea where you can place a fib. For example, if we look at the 1 hour chart, one way of doing that is, for example, you can see here's a sizable correction, and the oscillator is to the 0 line here and at the 0 line here. So this seems to be one swing high, swing low. So in that case, you could put fibs on this smaller move up and on this smaller move up. Yes, it's possible, but those are more like 15-minute fibs. On the 1 hour chart, in fact, when we see that this is at the 0 line and this is at the 0 line, we can take all those smaller fibs off and put a bigger fib from top to bottom, which is from here to here. And we only had a 23.6% bounce. So that's how you can use the oscillator as well. Other than that, you can, last tip is that you can wait for the target to be hit before placing a new fib. Because if the target isn't hit, then we're probably still using the same fib. You don't want to put fibs with too many fibs within fibs. You can put, for example, this fib on. Let me say it this way. Let's fib this upside here. This first upside. You don't want to put too many fibs in this part, because it's all within this top to bottom here. Once we move away and hit the targets, then we could put a new fib from here to here, right? That's what I mean. Alrighty. Well, that I think, I'm not sure what I wanted to say still, but I think that's it, what I wanted to show you on the odd USD. So I'm looking for reversal signs anywhere in here. If we don't go that low, and we were to bounce off here, for example, just above it, then I'll look for some kind of correction trend line that can break, and I'll take the breakout. So if it doesn't go that low, then the breakout. If it does go that low, I'm looking for reversal signals in that green zone. But would I put a pending order? Not. Personally, I wouldn't put a pending order here. I would rather wait for price, in fact, to bounce off that. So the difference between the euro and the odd is that the euro, I see the trigger and the entry are the same. In this case, that zone is a trigger, but it's not the entry. The entry would be a price action signal or a break of a 1 hour fractal to the upside. Euro pound, unfortunately, didn't go as deep as I was hoping for. It would. Didn't reach the 84 level, so that's a shame. It did break above this black trend line, which meant we had a breakout here, in fact. So that was would have been a great bounce trade, right? That was a perfect example of a bounce trade off the 618 fib. Unfortunately, it didn't get filled. That's a pity. This is a classical example of a breakout. So if you don't get the bounce, then sometimes trading the breakout is the alternative of catching that currency. I didn't manage to catch it. It happened during NFP anyhow. So what can you do? Sometimes it happens. But in theory, though, if you don't get the bounce, then you can always try to get the breakout. At the moment, I don't see really anything that is tradable for me on the euro pound. Not right here, right here. Right now, right here. Because we just broke out. Maybe, yeah, the only thing that pops in mind, maybe a bounce off this trend line here for continuation upside. That could make sense. But let's see. I'm not too sure. I am looking at this 1 hour chart, and we had a very strong oscillator reading here, but so far the break, although we did break, isn't giving us very strong signals of an impulsive break, which it should be, because if this is wave 1 and this is the wave 3, this should be flying up, in fact. So it's not flying up. So as much as I think it should, because look at the oscillator compared to this. That makes me a bit leery, and I like the euro dollar and dollar yen more, therefore. So I wouldn't, yeah, I'm just not in in a situation that I would say this is worth it to trade a bounce off here at the moment. Maybe if price were to hook back there and we do get a good 4-hour price action signal here, it could be worth it, but other than that, I'd rather wait and see. We have maybe 4-hour divergence here. That shouldn't happen if it's really a good breakout. So no, I'm still in the wait and see mode here. In fact, you never know. This could be, because it broke not as impulsively as I expected to, what could happen, in fact, is that this is all part of a bigger correction like this, and then we move up. So still leaving, funny enough, leaving that entry order at 84, I'm still going to leave it there, even though we broke the top. This could still be a bouncing area if price goes that deep. And it has everything to do with this motion that could happen. I'm going to add one more fib, and this is important. I'll have to check this number, but I think it's around 30 or something like that, 38. Price cannot break above basically 85.70, or otherwise that analysis is through the window. If price were to go through 85.70, then this correction will not happen anymore. Or in any case, if there is downside after that, it doesn't belong to this correction. 85.70 is the invalidation level. Anything below 85.70 could still be this. And I know that sounds funny maybe for some, but when a top is broken, it doesn't always have to be a trend continuation. It could also be an expansion of the correction. What happens is that we get an expanding correction, in fact. That can happen. Considering this weak break, I think, as I already mentioned twice, it is possible to do that. So that's why I do think that the entry order is keeping it there and expecting a bounce here is possible, and therefore leaving the entry order makes sense. And if we do move down there, we can have that bounce. So that sums it up. Why is it 85.70? I have to check the level again. 1 second. Let me do that 1 second. I'm going through my notes. It's a fib level, that's for sure, but I'm checking which level it is. I think it's 1382. Does anyone know? Any chance wave B can extend more than that? Not more than that, I think. But I want to make sure that that's correct. So I'm going to do that right now, in fact. By looking at my notes, just need to find it. Yes, it is at 138.2. So let me write that down. 138.2%. Yes, there's a limit indeed. Exactly. There's a limit indeed where wave B can go. Otherwise, if it goes above there, then it's just not a wave B anymore in any case. Wave B can break the top, and it can, something like this can happen when you have a small break like that. That still could be a wave B in fact. Not always does wave B have to end before this top. Exactly. So it is, I was right, it's 138.2, but I'm not sure if we should be using the expansion maybe instead. 1 second. No, that would not help. 1 second. I'll just manually calculate it. It's 85.08, and the downside is 84.28. So that's 80 pips. So if we multiply 80 times 38.2, let's do that. That should be 30 pips. So it shouldn't go higher than 30 pips above this top. So this level somehow it's a different number. I don't know why, but it doesn't reflect what I wanted to explain to you. So I don't know exactly what number I have to type in to get that, but I'll check that later. In any case, price in fact cannot go 30 pips. I mean, the maximum it should go above is 30 pips above the top, which means if we add 30 pips to the top, and the top is at 85.08, we shouldn't go above 85.38. That is the invalidation level. I know it's my mistake. I know what I did wrong. Now I know what I did wrong. I should have used this fib. I was using this fib. You see? Sorry about that. If I add, I was wondering how come something didn't add up, but I can see why. That was my mistake. Yeah, it's already added. So now we have the correct now we have the correct fib. I had to fib from origin to A. And then this is the wave B. The wave B can stop at these fibs, but also at this 138.2. So that would be the max level that we're looking at. So that's the correct one. Now it's all good to go. So let's see. I can still be in a resistance zone as we speak. The funny thing is that either the euro is going to retrace deeper than the pound, or the euro is going to move up more than the pound does. So if this euro pound were to go down from here. So let's see, let's keep an eye on that for the moment. That bounce trade though is still a good idea, I think, on the euro pound from lower. Dollar CAD. Wow, we had two bounces, in fact, right here and here, didn't we? The funny thing is that despite the recent bearishness, right, I mean, this was recent bearishness, you can still fit a very nice uptrend channel, isn't it? So, and we did get 2 bounces off that bottom of the trend channel. So those were bounce trades in the past. Do we have anything left now? In fact, we're probably looking at a very nearby breakout, in fact, or if we're not breaking out already, is the question maybe. We still have a resistance right here. We're very close to that. Now, considering the fact that we are in an uptrend, on a daily uptrend channel, price approaching that resistance, in theory, this could be a bounce trade before we maybe move up. I wouldn't be interested in that kind of bounce trade because of the uptrend channel, and surely also, if you then zoom into the 1-hour chart, this massive upside impulse. Now, obviously, this is still a resistance, but it's not a trade, a particular bounce that makes sense to trade, in my opinion, because of the uptrend channel and the up impulse on the 1-hour chart. So, yes, we could bounce there, we could break, but we could also break through it. It's a coin flip. Doesn't make sense to trade, at least to the downside. Does it make sense to trade to the upside? Not at the moment, in my opinion, because we're only like 30 pips away from that top. So we're in a neutral zone. I want to trade it to the upside, in fact, because we're in an uptrend, but it doesn't make sense in here. Either we break above daily resistance, I make a bull flag, and I gladly take it to the upside, or we move up, we retrace, and a bounce from lower here to the upside could make sense. Otherwise, till that one of those two scenarios unfolds, I'm not interested. The other option, of course, would be if we were to move down here, break the bottom, and then, of course, the bears are interesting. Without not even showing that because it's not going to happen soon, probably. Looking at this weekly chart, though, once we break this top, 104.18, I think we have a pretty decent chance to make a good bull run here on dollar CAD. You can see that this was a weekly consolidation zone. And this is very interesting. Take a look at this, please. Look. Weekly candles made higher highs from here. Higher highs, higher lows. The exception was 2 weeks here. And we continued with the upside with higher highs and higher lows. Then we got 1, 2, 3, 4, 5, 6, 7, 8 candles that couldn't break this top. We know that 5 is critical. Therefore, we're not surprised to see that the dollar CAD couldn't break that top at the 8th candle, and indeed decided to make a bigger reversal. That reversal, however, could not break this uptrend channel, and we got bounce right in here. Now, if we break the next resistance at 104.18, when price then approaches this resistance, obviously it still remains a resistance, but it's the second approach, not the first, after a considerable consolidation zone, which means that after some respect on the lower time frame for the top, a breakthrough, I think, is quite decent chance, which means that once we break above 148.18, there's a decent chance of a bull run here on dollar CAD, in my opinion. Where to? We'll have to zoom out and look at the weekly chart to find the next important resistances, and that could be anywhere from 106.50 to 108.50. Which means, well, it's not a lot of space, but you know, the dollar CAD doesn't really have a lot of space. It's just really quite tight in its movement. It's not like the pound yen. So yeah, space up to here, but even up to here potentially, right? So 104.18, very key top. Break of that, bulls, showing that bulls are in control and could expect, and there is space to the upside. So I hope that makes sense. We'll keep an eye on it. Do I want to put a pending order anywhere there? Not yet. I mean, one could think about, in theory, one could have a pending order right above 104.18 with a stop loss below here, targeting, if you want to be conservative, the next red line there. That could be a swing trade idea, but personally, I don't know. I'd rather wait than try to get a tighter stop loss, in fact. Either from here or upon the break, correction, and next break. So we still have 10 minutes left. I guess we'll be rounding up, but we probably still have time. Well, we have time for one more. Any preferences? Anyone have a preference for a particular currency? Gold. Yeah, we can take a look at that. Gold is, in fact, seems like it's breaking out to. Oh, what happened here? Oh, this is the. What is this? Oh, it's the 1 minute chart. Ah, I thought I didn't know what it was. It seemed very dramatic. It made $7 move down though in the last few minutes, as we can see. Well, we did break out of that downtrend channel. So yes, sorry, no. So there is a chance to continue that breakout up to 1500. But we have to be careful of the top, of course, at 1433 still, and maybe even this resistance line, the orange one. If we do break above the orange one, then we have to be careful of the 1433. And then if we break 1433, we can go up to 1500. Why 1500? Because that's where we have all these bottoms. No, sorry, a bit higher. 1520, sorry. That's where we have, in any case, where we have all these bottoms. So to me, this could be a breakout for upside to 1520. It would be something like this. But you never know. This could be a downtrend channel, a hook back for more downside. So we have to be careful in this zone. Both are, in fact, realistic potentials. Now that we broke out of that downtrend channel, some upside was possible. We probably have to break through the orange one to get that upside, maybe up to the red line, and then up to the next one. I would say this is, in my opinion, probably the most likely, this scenario. A pause, break, break to that level, and then probably respect. So I don't trade actively gold, so where would I want to enter? Not too sure at the moment. I guess upon the break, somehow 1 second. There could be a breakout trade here. There could even be a bounce trade because this is a 5-wave move, there could be even a bounce trade if we correct off of, for example, here. We could see maybe a bounce. Would I want to put a pending order here? I'm not sure. You could probably wait for a confirmation of that bounce before trading it to the upside. So those are some ideas. I won't be trading it myself, but those are some ideas that I have when looking at it. New Zealand dollar. Well, New Zealand too, very close to the resistance, right? That's we were saying. Look at 886 fib standing in the way. Price missed the 886 fib by a mere 7 pips. No, 17. But anyhow, relatively close. Plus, we had all these resistances above. So, yes, that was indeed danger territory for bulls, and a reversal, in fact, or the downside, moving now pretty impulsively. Funny enough, though, that this could still be a bouncing area, right? Anywhere between those green lines, around 83.30, up down to 82.50, that could definitely still be a bouncing spot for upside. Would I want to trade it to the upside? No, because this is moving down a bit too fast for me. But if we get some confirmation, it could make sense. Now, how far would that bounce go? We don't know. It could be if the bounce is going something like this, if the bounce goes something like this, we could even expect maybe a head and shoulders. Something like that could be a scenario that could unfold. So yes, we bounced off this. Now we could bounce off this. And depending on how price goes, we could bounce off this for head and shoulders. Or if price does move up aggressively, then we can maybe see a continuation up to higher resistance somewhere in here before we might see a bounce. So that depends on how price responds to that level. At the moment, I'm waiting to see, first of all, if we can bounce here or not at that green circle. Euro dollar, let's take a look. Yeah, euro dollar is, I don't see a pin bar as yet. We did have a bit of a wick here. We're making bearish engulfing twins. So that happens in uptrends. Eventually price moves to a level that buyers are not interested anymore. Why is that? Because buyers don't want to buy at the top. Buyers want to buy on dips, right? And eventually it reaches such a level that it's going to retrace. So, yep, definitely. That's showing the overextension on a higher time frame, and that's why there is no trade on the euro at the moment. It's overextended on the lower time frames, but obviously the higher time frames showing that uptrend. What are the chances of this becoming a reversal retracement? Well, I think considering the strength on the uptrend on the higher time frames, I wouldn't consider a reversal at the moment, so that's why I'm not interested in trading it to the downside. This is most likely going to be retracement. Statistically, I think that is a higher probability. So if this is a retracement, then it makes more sense to look for the bounce to the upside and to analyze where the retracement could finish, in my opinion. So looking for 137.11 up down to 136.50 as the bouncing spot. But maybe we can bounce higher though. Maybe we will use this 4-hour higher low as a potential bouncing spot, which could happen. And we could see a bounce in here. But I rather either wait for a bounce lower or a flag or triangle before trading it indeed to the upside. So either a chart pattern in here, anywhere above 137.11, I want a chart pattern before trading it for upside continuation, or if it does correct lower, a bounce at this level. The session is in fact, well actually we have 3 a week. I'm not sure if you're aware of that, Sammy, but maybe you mean, I'm not sure if you mean a weekly, like once a week, weekly overview? Because we have them actually 3 times a week. Just in case you don't know, they are on Tuesday, Wednesday, Thursdays, the same time. You can go there by going to education, admiralmarkets.com, go to education, go to webinars. And then you'll see every time it says live trade session, basically live there, that's the one with the live trading session. Well, folks, that's going to wrap it up for today. I'm going to have some breakfast. Otherwise, you'll start hearing my stomach through the microphone because I'm quite hungry. Some quick breakfast. I already have the banana and yogurt next to me. So thanks for being here, first of all. And I hope to see you tonight because we're going to take a look at filters. So basically that will be like one of those steps within the structures we're looking at, right? What kind of filters are important to decide if it's good to trade or not. So filters are really blocking trades, reasons why we wouldn't trade. And I think those are important too because we can find a lot of reasons why we want to trade, but I think just as important are actually reasons why we shouldn't trade. So that's tonight. Alrighty, folks, have a great day and see y'all soon. Cheers.